Okay, so good evening, family. So right now, what basing on the text I talked to I did post in the WhatsApp is that we have to follow the higher time frame. That is when you're identifying the trend, and then we also have to continue doing our top-down analysis from the monthly, weekly, daily, 4 hour, 2 hour, 1 hour, 30 minutes, 15 minutes, if possible, the 5 minutes. But remember, so we have the monthly, weekly, daily for our, that is for identification of our trend. Then you have 2 hour, 1 hour, 30 minutes, 15 minutes. That is for the confirmation and entry signals. So I'm going to do short videos of 5 minutes each, which you can easily see or where we can easily follow, but they're going to be in bits. Reason is I'm using screen power. Screen power is free, so it allows us to only record 5 minutes videos. But if you subscribe, then you can record a little bit longer. So we start by developing a list of confluences. Confluences is something that you follow on your list. Like you can see, identify the monthly is bullish, weekly is bearish, daily is bearish, 4 hour is bearish. Then, basing on this list, is how you can identify whether to sell or to buy. If it doesn't match, then you cancel out that trading pair, and then you go to another trading pair. You still do your analysis. So we're going to apply the same thing on these pairs. Remember, we are identifying USD pairs. Yeah, so that's what we're going to be doing. List of confluences is like a list you have to follow, and then two is that we're going to make our area of interest on the higher time frame. So area of interest is the same as support, resistance. It's also the same as demand and supply. It's also the same as order blocks. So for what I know is that things are the same. It's just that, for example, in Uganda, when people want to make money, they publish different books. So you have mathematics, you have abacus, and then you have other mathematics books. So they have different names. They have maybe the same formulas, but people are just marketing their books. So you can buy any book that you want. So here, people also did marketing of different books, call it different names, but it's the same shit, same formula, same thing. So that's so far what I know. So we're going to start with the monthly, weekly, daily, 4 hour. I said that is for identifying the trend. Remember, I also said that the trend is our friend. So whenever we try to go far away from the trend, it actually will go in a loss. Remember, we are small scale retailers. Yeah, we are small scale traders. We have maybe $10. So actually, the trade that I analyzed, I started with $10, and then I went to $60 and to 80, then eventually to 125, and then eventually I lost some $20. But along the way, I was also losing some money, and that is why I've decided to stick on USD pairs. Reason is, at least when the USD is to move, it will move. But when you go to GBP, for example, let's look at GBP UGX. So Ugandans, we rarely get the pound and we exchange it. So it's still going to show that movement, but at a smaller pace. But when you analyze like USD UGX, remember the US dollar moves maybe within a year, it can go to 3,500, and then it waits for some 6 months, it goes to 4,000, like that. So that is why we're sticking to those currency pairs where we have USD JPY, those major economies, USD JPY, British pound, and New Zealand dollar. I think you know them, since we are not startups in Forex. Yeah, and also is that since this is a risky business, I was thinking of including everyone, even Chizito, but Chizito, it's a risky business. Was they have to first try to eat your money, and then you get to know something, and that is when a forex person can take you up. Otherwise, money goes out. Lost some good money. That is why I'm able to learn. So yeah, so it is risky. Next video is starting our analysis from the monthly, and then I will show you how.